Hi everyone, hope everything is going great for you. I am CA Ushma Jain. Welcome back to my channel. The Union Budget 2025 introduces significant tax changes. In this video, I want to cover amendments that will impact NRIs across the globe. My focus is solely on NRIs, specifically individual taxpayers residing abroad and having income in India as well. In this video, I'll break down the revised tax slabs, will try to explain key amendments and will clarify some common misconceptions to help you better understand their impact. So, stay tuned until the end. 1. Budget 2025. When do these changes take effect? Before we jump into the details, let's first understand the timeline. The changes announced in Budget 25 on 1st February 25 will apply to the financial year 25-26. This means when you file your income tax return in May or June 2026 for financial year 25-26, at that time these changes will be applicable. However, for financial year 24-25, the old tax slabs will continue to apply. 2. New tax slab rates, what's different? As we approach the end of financial year 24-25, it's important to first understand how income for this financial year will be taxed. For financial year 24-25, taxpayers still have two options. That is, they can either file their taxes in old tax regime or they can opt for new tax regime. Old tax regime comes with higher tax slab rates but allows deduction for investments and expenses like PPF, life insurance, health insurance, HRA, LTA, ELSS, etc. While new tax regime offers lower and more favorable tax slab rates but does not allow any deductions. Old regime tax slabs for financial year 24-25 applicable for NRIs and individuals below 60 years is as follows. Up to 2.5 lakh, no tax. 2.5 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. On which surcharge and cess will be extra. In this regime, few deductions and investments like PPF, ELSS, etc. will be available. In new tax regime, tax slab will be as follows. Up to 3 lakh, no tax. 3 lakh to 7 lakh, 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. And above 15 lakh, 30%. But in this new tax regime, no deductions will be allowed. You can see that tax slab rates in new tax regime is lower. The current slab rates will apply when filing the tax return for financial year 24-25. However, for the next assessment year, while filing the tax return of financial year 25-26, the revised tax rates announced in Union Budget 25 will come into effect. The changes in tax slabs for 24-25 are significant, aimed at providing relief to the middle class, who form a crucial part of India's economy and contribute diligently to tax compliance. The revised slab rates are as follows. Up to 4 lakh, no tax. 4 lakh to 8 lakh, 5%. 8 lakh to 12 lakh, 10%. 12 lakh to 16 lakh, 15%. 16 lakh to 20 lakh, 20%. 20 lakh to 24 lakhs, 25%. And above 24 lakhs, 30%. And no deductions will be allowed as these changes are done in new tax regime. Taxpayers have received a good relief with the reduction in tax slab rates. Previously, individuals earning above 15 lakhs were taxed at 30%. But starting from financial year 25-26, this highest tax bracket will apply only if your earning is above 24 lakhs. Other tax slabs have also been revised to be more favorable, making taxation more lenient overall. This is a major benefit for taxpayer, including NRIs, as they can now claim larger refunds, especially on TDS deducted from interest and dividend income in India. With these revised tax slabs, the old tax regime is gradually becoming less relevant. 3. Income up to 12 lakh. Really tax free for NRIs? Many of my NRI clients often ask why, despite the government claim of no tax up to 7 lakh, they still end up paying some tax even if their income is 7 lakh. Here is the catch. The tax slab states that income up to 3 lakhs is tax free, while income between 3 lakh to 7 lakh is taxed at 5%. This means that if your total income is 7 lakh, your tax liability would be around 20,000. I am excluding the education cess for now. However, a rebate under section 87A allows resident individuals to reduce their tax liability to zero if their taxable income is within the prescribed limit, which is 7 lakh for financial year 23-24 and 24-25. Please note, NRIs are not eligible for this rebate. So they still have to pay 20,000 in tax if their income is 7 lakh. For financial year 25-26, the rebate threshold has been increased to 12 lakh, providing a major relief. But nil tax if income is 12 lakh is applicable only for residents, because NRIs cannot claim rebate under section 87A. However, we should acknowledge that the overall reduction in slab rate is significant and it will 100% going to benefit NRIs as well. 4. Updated return filing extended to 4 years. What this means for NRIs? A significant relief in budget 25 is the extension of the updated return filing period from 2 years to 4 years. This means if you missed reporting income or made an error in previous filings, you now have 4 years to correct it. Why is this important? It is important. It will help you to avoid penalties and scrutinies from tax authorities. It will provide you more flexibility in rectifying unreported income. Particularly useful for NRIs dealing with foreign income and investments in India and abroad. With tax authorities having increased digital scrutiny, it's best to keep your tax filings error-free and updated. 5. Changes in Liberalized Remittance Scheme (LRS) relief for NRIs. Great news for NRIs receiving money from their resident relatives in India. The TCS, tax collected at source, threshold under the Liberalized Remittance Scheme has been increased to 10 lakh from 7 lakhs per annum. So when a resident parent used to transfer money to their NRI children abroad, if that amount was above 7 lakhs, then banks used to deduct TCS. But now this limit has been increased to 10 lakhs. And for remittance exceeding 10 lakhs, TCS applies at rates between 5 and 20% depending on the case. If the remittance is for education fund via an approved loan, TCS is now completely waived. This update makes it easier for NRIs to receive funds abroad without unnecessarily tax collection upfront on the sender. 6. Changes in TDS rates, no impact on NRIs. Budget 25 introduced some changes in TDS rates, but these do not affect NRIs. Changes have been made on TDS applicable on residents only. 7. New income tax bill, big reforms coming soon. Another major development is the announcement of an upcoming income tax bill, which aimed at simplifying tax laws. While details are still awaited, this could bring significant reforms for NRIs. So stay tuned for more updates. That concludes our discussion on how Budget 25 impacts NRIs. This budget has brought smiles to many faces. It truly rewards taxpayers who contribute honestly to nation building. It's clear that things are changing in India, and I hope this positive momentum continues. I hope this video provided valuable insights for NRIs. For any query, you can contact us. See you in the next video. Bye.